Hi guys, Proteus Bruno here. Today is Friday. The market closes in some couple of hours to come. How has the week been in terms of trading for you? How many trade setups have you found? How many have you taken? How many wins have you made so far? Kindly share with us in the comment section. Of course, the market has been very obvious this particular week. It has always been and will always be obvious with trading opportunities. It is just left onto you as a trader to find your edge in the market and then trade as your edge says. But in today's video, we want to look at the concept of liquidity. Now, if a forex trader says the market has generated liquidity or there is liquidity at this particular price point, what does that trader actually mean? Now, liquidity is defined as any price point or an area where you can actually see retail stop losses. So if a trader says at a particular price point or an area, market or the price has generated liquidity, it simply means that at that price point or an area, that is where retail traders will put their stop losses if they actually place a trade. So now, what does it tell you as a trader? It indicates that for a retail trader, anytime he sees a doggy candle at a particular price zone, be it a resistance zone, a supply, a demand, or a support zone, it is a sign of reversal. So, for instance, let's say he started observing a doggy candle at a particular resistance or a supply zone. So, what he or she does quickly, he places the trade and then puts his or her stop loss right above the doggy candle, and then if it is as a support or a demand zone, he places the trade and puts his or her stop loss below the doggy candle. That again can be said for double bottom and then double top. Now, for a particular retail trader, anytime he sees that price keep on bouncing up from a particular zone, let's say a double bottom, then that zone become a strong zone. So what he does is that anytime price reverses back to the zone, he quickly takes the trade and then places his or her stop loss right below the zone. And if it is a resistance zone, he does the same thing. He places the trade and then puts his or her stop losses above the zone. Now let's quickly jump into a real-time chart and then try to identify liquidity zones. Now, right into the real-time chart, anytime you are dealing with liquidity, you want to start identifying liquidity on the higher time frame. That is the monthly time frame, the weekly time frame, the daily time frame. Of course, you can add 4-hour time frame, right? But the idea I'm trying to create is that anytime you are dealing with liquidity, the higher the time frame, the stronger the liquidity zone or the stronger the liquidity price point. So let us go to the monthly time frame and then try to start identifying liquidity. Now, right into the monthly time frame, you want to remember the definition for liquidity and then start identifying liquidity zones. So we say that liquidity is any price point or an area where retail traders would like to put their stop losses. Okay, so when we come to the monthly time frame, that is where we want to start identifying liquidity. You want to start looking for liquidity in the form of a doggy candle or double bottom or double top. So let's consider current price point or current price action. So let's say 1, 2, 3, 4. Within 4 months, we have this candle closing in a form of an inverted hammer or however you call it. Then at its top, there is liquidity there. Okay, so let me use an arrow to indicate the presence of liquidity. Then right after that candle closure, the next candle closes as an inverted hammer again. Let me try and use an arrow again to indicate liquidity. Now, last month candle closed as a doggy candle, so its top and bottom becomes liquidity. So liquidity here and then of course liquidity there, right? So once you are done on the monthly time frame, you want to go a little bit lower, then of course that will be the weekly time frame. So let's switch to the weekly time frame. What am I doing? So weekly time frame here. Yes, so you can see that is what I was saying. So that inverted hammer candle giving you a doggy candle on the weekly time frame. So you want to identify that point which has been identified. Now you can actually see what price is doing right over into the weekly time frame. You can see when this liquidity point was created, price came back all the way to take out that liquidity before giving you another push, right? Now this was created, it came down, and then it eventually came back to take that liquidity point. So that is the power of liquidity. So you can continue identifying liquidity in the form of doggy or double bottom if you actually see double bottom or double top. So right away into this candles, the red candle there in the middle, this particular one, its top becomes liquidity because it is a doggy candle. So you identify that point as liquidity, and then its bottom becomes liquidity too. So this is what so just look at it. Right after this candle closure, you realize that price wicked below that candle and then started going up. That is liquidity. Price is always seeking liquidity or generating liquidity, but the idea is that once it is seeking liquidity, it continues to generate liquidity, and once it is done seeking liquidity, it comes back for the liquidity it has generated. That is how price works. So I can identify here too as a liquidity point. All right, on the weekly time frame, this is what you have. Of course, you can identify more liquidity on the weekly time frame again. So right into the weekly time frame, this particular doggy here becomes a liquidity point, the top and then the bottom, and then this right there becomes liquidity point. And then of course here, let me try and adjust my arrow. Yes, so it becomes liquidity point. Right after that candle closure, we have this one too becoming liquidity point. So what I do is that anytime price take away liquidity, I try to take away the arrow and then focus on current liquidity zones. So let me adjust this one too. We have the liquidity zone right on top of this candle, right? So yeah, this point here too is liquidity. Let me bring an arrow to indicate the liquidity. So you see how price just takes away the liquidity and then try to go up. So that is how liquidity works. Wherever you see liquidity in the form of a doggy or a double bottom, you want to identify that liquidity and expect price to come back to that liquidity. Now once price is coming back to that liquidity, what does price do? It generates liquidity before it goes to that liquidity. So when price came back right into this zone to take away this liquidity here, it generated liquidity, then continued the down move. You see liquidity there, and then the down move continue. Okay, so price is always generating or seeking liquidity. So now let me take you to my chart, that is gold, and then let's try to see how real things are marked over there. So you can see I have that zones there already, my supply zones, my order block zones, my market structure, like following price action, and then of course some one or two secrets that I do know about that I used to trade. Of course, FU candles, you can always read about them. Okay, search anywhere you find them. They are quite interesting candles if you actually learn about them, right? So right, let's just go through today's price action over here. Let me switch to the 4-hour time frame. Okay, so we have this as our 4-hour chart, right? So liquidity point right there, you can see I've indicated it with an arrow. Yes, of course there's one right over there. Let me put the arrow there, so that becomes a point of target. So when price was coming down right into after the bullish move yesterday, I anticipated that market should take away this liquidity before a bullish move. But guess what? I missed this entry. I was somewhere else doing something. I was occupied when I came. Price has already left this particular zone. I missed the entry. That would have been a nice trade for me. So yeah, the idea is always try and identify liquidity first anytime you are dealing with your analysis. Once you are done, you try to implement your zones. Whatever be the zones are supply and demand, support and resistance. So your order block zone, your supply and demand zones, your FU candles, institutional candles, of course, you use them and then you try to find trade setup for yourself. This is the part one of this video. Of course, liquidity is in many forms. This is just one of it, and then the next video will come on the second part of liquidity. Thank you. Do well to do the YouTube drill. Subscribe to my YouTube channel, hit the subscription button, and then like the video. See you in the next video. Peace out.